You'll get to know about the 10 assets that will keep your family rich forever. There is a bonus asset at the end, so keep watching till there. Now let's start. Number 1. Savings accounts. While interest-bearing savings accounts may seem unexciting, they serve as a reliable low-risk option for generating income and making your family rich forever. Rather than allowing your funds to sit in a high-fee bank account, consider options that can generate interest on your cash. Many online banks provide complimentary accounts, allowing you to maintain your funds without incurring any banking fees. CIT Bank provides a selection of 3 interest-bearing savings options: Premier High Yield Savings, Savings Builder, and Money Market Account. Each of these account options requires a $100 initial deposit and offers different interest rates and account benefits. The Savings Builder presents a valuable opportunity to accumulate savings through manageable contributions. With a minimum recurring deposit of $100 each month, your savings can benefit from an enhanced interest rate, helping you grow your funds more effectively. Given that bank interest rates are currently below the annual inflation rate, it is advisable to allocate your long-term investments towards assets that offer greater growth potential. Utilizing savings accounts can be an effective strategy for managing your cash while you explore new investment opportunities, or if you anticipate needing access to those funds in the near future. Your funds generate returns, providing immediate access to substantial amounts or more advantageous investment opportunities. Keep in mind that the apps discussed in this video are not for promotional purposes, so you must do your own research for choosing one, and also read the insights of assets before investing. Number 2. Certificates of Deposit (CD). Savings accounts provide convenient, penalty-free access to your funds. However, the interest rates tend to be underwhelming. A bank certificate of deposit offers the potential for a higher yield while maintaining low volatility. Typically, the most advantageous certificates of deposit necessitate a minimum deposit of $1,000 and come with a term of 12 months or more. Many certificates of deposit impose a penalty for early withdrawal if you access your funds prior to the completion of the term. CIT Bank provides no-penalty CDs featuring an 11-month term, requiring a minimum opening deposit of $1,000. Your interest rate can stand out when compared to traditional CDs that impose early withdrawal penalties. Consider the possibility of elevated interest rates compared to traditional savings accounts, along with shorter investment durations. Subscribe to our channel and also press the like button to know more financial tips. Number 3. Income-generating equities. One advantage of investing in stocks is the potential to receive dividends, which can be reinvested for further growth. During retirement, relying on dividend income can effectively cover your expenses without the need to liquidate your investments. A decreasing portfolio value indicates that your remaining balance may generate lower compound interest over time. It's important to note that not all individual stocks provide dividends, particularly in sectors like technology, where there is significant potential for growth. Established companies such as consumer staples, utilities, or real estate investment trusts, REITs, tend to have a higher likelihood of distributing dividends. Should your portfolio include an S&P 500 index fund, you are already benefiting from some dividend income. There is potential for your portfolio value to grow if the share price of the index fund appreciates over the long term. Consider purchasing dividend-focused ETFs and mutual funds available through various investing applications. These funds typically invest in equities that offer the most substantial dividend returns across different sectors. Number 4. Bonds. Bonds represent another avenue for generating income through investments and keeping your family rich forever. For many individuals, a prudent approach is to consider purchasing investment-grade corporate and government bond index funds. These funds are available for purchase within your 401k, IRA, and taxable brokerage accounts. Bonds generally exhibit a more modest long-term growth potential compared to stocks, yet they also present a lower level of volatility. When you hold bonds, you are essentially providing a loan to a company rather than purchasing equity through stock shares as an investor. In the event of a company's bankruptcy, it is important to note that bondholders are prioritized for payment over stockholders. Many retirement planners and automated investment services suggest that younger investors should include a portion of bonds in their portfolios. A 20-year-old could consider allocating 90% of their portfolio to stocks and 10% to bonds. As you progress through life, it is important to recognize that your allocation to bonds tends to rise with age. Prior to retirement, your investment allocation might consist of 60% in stocks and 40% in bonds. Bonds typically exhibit lower volatility compared to stocks and may offer higher yields than traditional savings accounts. Number 5. Small business bonds. Typically, corporate bond ETFs focus their investments on larger corporations. Small business bonds may serve as an excellent option for generating income within a short-term investment strategy. Worthy Bonds provides a fixed annual return of 5.5% for every note issued. Worthy notes can be purchased in increments of $10, with a term lasting 36 months. There are no costs associated with purchasing or selling bonds, even if you decide to sell them prior to the 3-year maturity date. This passive income opportunity does carry some risks. However, Worthy mitigates your potential downside by securing each bond with tangible collateral. In the event of a borrower defaulting, it is important to note that your investment is unlikely to result in a complete loss. These options could prove advantageous as they provide a fixed annual return of 5.5%, come with no fees, and require a low minimum investment. Number 6. Real estate investment through crowdfunding. In the past, the primary method for individuals to invest in real estate with limited capital was through real estate stocks and publicly traded real estate investment trusts, REITs. These investments have the potential to generate consistent dividends. However, fluctuations in the stock market may affect the share price. Crowdfunded real estate provides an opportunity for you to invest directly in multifamily and commercial properties with relatively modest capital contributions. It is possible to achieve annual returns of at least 5%, which can be quite competitive compared to the average annual performance of the S&P 500, all while experiencing reduced volatility. It is important to note that the majority of real estate platforms necessitate a minimum investment period of 5 years to circumvent any penalties associated with early withdrawals. Engaging in multi-year investment strategies can lead to the possibility of achieving greater returns compared to solely focusing on stock investments. Consider exploring leading real estate crowdfunding platforms such as Ground Floor and Fundrise. Ground Floor adopts a unique strategy in the investment landscape compared to traditional real estate platforms. Consider allocating a minimum of $10 towards properties in need of renovation located in various U.S. cities, with a loan term ranging from 12 to 18 months. According to Ground Floor, the typical return on investment stands at 10%. Fundrise focuses its investments on multifamily housing and commercial properties throughout the United States. Individuals across all 50 states in the U.S., regardless of their income level, have the opportunity to invest with Fundrise. To begin your investment journey, you can start with a minimum initial investment of $500. Number 7. Investment in rental properties. Rental properties represent a valuable opportunity in real estate investment, serving as a potential source of significant income and making your family rich forever. Consider the option of acquiring a single-family rental property. Investing in a duplex can be advantageous, as the rental income from one unit can help mitigate the financial impact of a vacancy in the other unit. Investing in a local rental property can be advantageous if you intend to manage your unit independently. Roofstock provides an opportunity to explore real estate options in various cities throughout the United States, especially when your local market may not align with your investment goals. Consider utilizing Roofstock as a means to enhance the diversification of your existing rental property portfolio. Investing in rental properties typically demands a larger capital commitment compared to participating in crowd-funded real estate opportunities. Nonetheless, the possibility of enhancing your investment returns exists, and you will have full ownership of the property. Number 8. Agricultural land. Investing in farmland may seem unconventional, but it can serve as one of the most effective income-generating assets and keep your family rich forever. Building wealth from this asset is achievable for anyone, regardless of their background in farming. It is feasible to provide financial support to farmers who handle the labor-intensive tasks. AcreTrader provides a platform for accredited investors to acquire shares in operational farms across the United States. There are opportunities to generate income through the annual rent payments received from the farmer, as well as the appreciation in land values over time. AcreTrader's recent land offerings include cash crops such as almonds, corn, cotton, peanuts, and soybeans. Every investment opportunity outlines the expected rate of return and the projected duration of ownership. It's important to recognize that this asset may necessitate a greater cash outlay and a more extended investment horizon compared to other options. The majority of investment opportunities require a minimum commitment exceeding $15,000, with an ownership duration ranging from 3 to 10 years. Number 9. Valuable metals. Recently, there has been significant interest in precious metals as a commodity. Many investors are exploring opportunities to invest in gold, given its historical significance as a currency spanning thousands of years. Gold serves various industrial purposes, notably in electronics and jewelry manufacturing. However, investing in precious metal bullions, including coins and bars, can provide you with a reliable and stable option for your portfolio. Bullion tends to be more straightforward to sell due to its purity, making it simpler to determine a fair value compared to consumer items. Investments in silver, platinum, and palladium are also sought after. However, it's important to note that their commodity prices may exhibit greater volatility compared to gold. These metals serve a variety of industrial purposes beyond their role as currency. A decline in industry demand can lead to a significant drop in these prices. Holding small allocations in various precious metals can enhance the diversification of your investment portfolio. As always, it's essential to conduct thorough research to assess whether investing in precious metals can contribute to your wealth-building strategy. Number 10. Art investment. Masterworks provides a straightforward platform for acquiring collectible artwork from a diverse range of both classic and contemporary artists. Investing in shares of artwork stored in a secure vault can be a strategic decision for long-term asset growth. The asset is expected to increase in value, allowing Masterworks to realize a profit upon its sale. Investors of all types, whether accredited or non-accredited, have the opportunity to invest in art via online applications. Investing in art may not provide dividends, yet it can serve as a valuable alternative to the stock market and can make your family rich forever. Prices for established artworks from renowned artists have the potential to appreciate, even when other asset classes are experiencing a downturn. Owning a diverse range of income-generating assets can be a strategic approach to ensure financial growth across various economic conditions. Number 11. Consider allocating funds to private startups. Starting a business requires both time and expertise, which not everyone possesses. However, you may possess the capital and foresight to allocate resources toward emerging startups. Various platforms, such as NextSeed, provide opportunities for you to invest in startups. Consider allocating your resources to emerging small enterprises, such as those creating innovative mobile applications, establishing boutique hotels, or launching local dining establishments. Investing in startups carries significant risks, particularly given the prevailing global circumstances. It may be prudent to allocate $100 to each company in your investment strategy. Identifying the next big idea can lead to significant returns, and you would have the privilege of being among the initial investors. Watch the video appearing on the right side to know how you could get rich on a low income. Also, subscribe to our channel to help us complete our goal of 10,000 subscribers.